So it is now officially 6:30. So we're going to kick it off again. Feel free to unmute and to ask questions as we go along, and we'll get to it. So let's get started. I'm doing this class tonight because one, the market is very volatile right now, and I'm getting a lot of questions, whether it's an email or phone calls, and they all seem to be centered around the same kind of, oh my God, oh my God, oh my God kind of questions. And so this is going to be, some of the folks are here. This may be your first time doing anything with the stock market. So I'm going to go over a little bit of what you can and should be doing. And then we'll get into some of the refresher stuff on some of what folks that have taken the class, or maybe they're already trading, some of the other things that folks can be doing. So let's get into it. So it's a combination of intro and refresher. And so here is where we're going to start. This is going to be the goal. I don't know if it'll be 30 minutes or an hour or whatever. So you are in one of three places, and most of you have seen this slide. You're either at the end of your career, middle of your career, you're starting your career. Another way to say this is hopefully at the end of your career, you have accumulated a pretty good amount of savings, whether that be in a 401k, IRA, or something else. So end of your career is basically you have money that you need to hold on to, and you need to make sure that you don't lose it, because you don't necessarily have the time to regain really big losses. So that's the folks that are generally, I would say, in the next 5 years or so, you're hoping to retire. So that's who I'm referring to at the end of career. Mid-career, I'm saying probably 35, 45, 55, somewhere in the middle. You've got some cash slash savings or investments, but you also probably have, a little bit more time than those folks who are looking to retire in the next 5 years or so. So the first you see I got highlighted there is what you two, the end of career and mid-career folks, should be doing. That's highlighted as go to cash. What should you do when the market is volatile like it is now? And it is really, really volatile, making 5 and 10% moves on a daily basis is just really scary. So the thing that, if you are, again, close to retirement, you can't afford to lose a big chunk. You've already lost, if you haven't gone to cash already, you've already lost probably 25 to 30% of the value of your retirement account. The way you stop that is really, you just basically you do what we call go to cash. We're going to go over the buy for vault. So let me explain, and I need you guys to ask questions if you don't understand what I mean when I say this. So how do you go to cash? You're sitting there and you got your 401k, IRA, 403b, and this thing is going down every day the market opens. Every time Trump walks up to the microphone, your portfolio loses value. It's simple. You call them up, whether it's you've already done it or you do it first thing Monday morning, and you say, I need to sell my mutual funds and basically get rid of my holdings. I talked to a few of you that had done really well over the last, 2-3 years. You were holding, mid cap, small cap, large cap stock. And now you're not doing so well because you had all of these, this big sell-off. So if you had sold your mutual funds, 3-4 weeks ago, and you were sitting in cash, again, when you sell your mutual funds and go to cash, you're not making any money, but you're not losing any money. So now, as the market continues going up and down 5 and 10% per day, you can rest well, you can sleep well, because it's not affecting you. If the market goes up or down and you're in cash, it means nothing to you. I mean, your portfolio does not change in value at all. Now, I do understand that some 401ks do not allow you to sit in cash. So you have to buy and own something. So what you do there is you say, sell all my mutual funds and buy US Treasuries. And the reason that you do this is, again, only if you're not able to hold cash. Treasuries are the closest thing to cash. It's basically you're agreeing to loan the government money. You're not going to get a very good return on your money. What US Treasuries guarantees is a return of your money. So if you can't just hold it in cash, tell your mutual fund, again, if you don't know how to do it online, you can call them up and say, hey, sell everything I have and buy the equivalent amount of US Treasuries. So I'm
Is
going to
that same as bonds?
Yep. No, not
Or
bonds. Not bonds.
not bonds?
Yeah, bonds, that's a great question. Bonds are basically money that has been lent to companies. So for example, if you buy an American Airlines bond right now, it's doubt if they go out of business, but that bond is losing value, right? So you don't want to buy bonds because that's money that's been lent to individual companies. You want to buy treasuries, which is a type of bond. It's a lending instrument, but it is money that is lent to the government. That makes sense, the difference there?
Yes.
Okay. Any other questions? Anybody have any questions about what you should do and how to go to cash? Because this is really important for most people that don't want to be out here doing the things that we do. This is probably the last slide that you'll need for the night. So I want to pause here and make sure that everyone understands if you have a large holding, this is what you should be doing with it. Questions, comments? So everybody knows how to take their 401k, IRA, whatever, to cash and to prevent any further losses. I will assume that is a yes. So let's get into, okay, so now I'm in the middle of my career. And like some of you are saying, what in the world can I do to, okay, you went to cash, so you're not losing any money. What can I do from a long-term perspective to kind of gain from this? This is where I talk all the time about the market moves solely on one thing and one thing alone, and it is emotion. And I don't care what anybody else tells you, you have to realize, and if you've been watching the market for the last 3 or 4 weeks, it is all about emotion. And what you have to also realize is that people get overly emotional and often overshoot any kind of reasonable kind of logic that they would normally otherwise have. People get scared and they make very, very bad decisions. And that's what we're seeing now. I mean, people are throwing away companies and their stock as though that, you know, this is the end of the world. And so it's always easier to look back at an incident that happened in the past and you can kind of see, what your decisions should have been. Because when you're in the middle of what we're in the middle of now, it's hard to kind of see that this thing is ever going to end. It just feels like, oh my God, this is going to continue forever. And people make decisions and choices on I mean, I've seen some estimates that are really, really scary of how many people be infected and die in business. And you have to realize one thing is we don't trade the news. So if you look at CNBC, Bloomberg, ABC right now, it will scare the bejesus out of you. And that's what it's done to the public right now, causing them to throw away stock and to be extremely afraid. And we're going to walk through some charts here in a minute, and I'll show you how you can measure that fear and you can measure exactly what they've thrown away. And what we want to be doing, if you have some long-term money, this is not the money you're looking to retire on necessarily. You've got this other set of money in the class, we call it the vault. These are stocks that you're going to give to your children's children. This is where wealth is created, because when you start adding in dividends and the like, it just piles up very, very quickly. So when we say buy for the vault, we're not really concerned about the price of the stock currently because we're never going to sell it. So the price of the current price of the stock becomes irrelevant. What you want to do is obviously you want to get a good price on the stock so that in 10, 15, 20, 50 years from now, it was a good buy. So let's look at how to determine when you can and should find a good buy on what we're calling vault stock. So in order to do that, we need to do a little bit of technical stuff. And basically, I've shown this chart in class, and for those of you that have never taken the class, this is an illustration of basically stock price movement from one extreme to another, the bottom line being support, the top line being resistance. So let me walk you through emotionally what happens. Stock price comes down, it touches this lower price, this lower band here, and then it starts to rise. Well, the people that bought right here, they're happy. And it gets to here and they didn't sell for whatever reason. And they're saying, you know, if it ever, or let me back up. The people that bought here are happy when it gets up to here. The people that did not buy when the stock price was down to this low, they're kicking themselves, going, oh my God, if that stock ever comes back down to that price again, I'm going to buy it. So as the stock starts to fall and it comes back down to that price again, the people over here that missed out, they're going to buy it. And it's going to keep going from these extremes because the people that didn't sell up here, so the stock goes from support to resistance, and it just keeps bouncing. So what you can do is you can find each one of these levels shows you where some usually very large group of people with a lot of money are emotionally invested in a stock. I'll say that again. These lines show you where people are emotionally invested in any stock. And just like everybody's doing right now, when it hits certain levels, the emotion kicks in, whether you're a professional on Wall Street or you're mom and pop, people start buying and selling based on the prior levels of certain stocks. So I'm going to walk you guys through some of these as an illustration. Let me pull up my charts here and let's look at, this is the Dow Jones Industrial Average. And I got a bunch of lines here. So let me walk you through a couple of these. This is a weekly chart. So each one of these little bars, we call them candles, represents 1 week. So here's what happened. We were running up and it seems like every day we could do no wrong. And we were just going up and up and up and up and up. And then all of a sudden we hit this level that's right about here. And for 3 or 4 weeks, we couldn't break through. Well, we had never done that. We were always just going up and up and up. This was before coronavirus. We started turning over here a couple of weeks before coronavirus had been out and we had been ignoring it. The market started having problems and people got emotionally like, oh my God, this thing is not going higher. And it's gone down like crazy for the last 4 weeks. So let's go back. And for those of you that are not familiar with charts, watch this little box right here. This shows you the date. Like right here, that date is 11/7/16. Does anybody remember what was happening in November of 2016? Anybody? All you political fans should know this. What happens the second Tuesday every 4 years? Election. Guess who got elected November of 2016? That was the Trump election right here. And look at what we've done since he was elected. And now all the people that were kind of waiting to see what the results of the election were, when he got elected and we went off to the races, there was a big emotional investment of all these people down here that did not buy in. Guess where the Dow is going to next? Anybody? Anybody? Anybody?
Back down there.
Back to that level.
Yeah.
Okay. So we're not done going down, but we are really close. We are within, what's that, 500-600 points? Guys, we've been moving 900 points a day. So
Right.
that we'll probably hit that Monday or Tuesday before the market starts to try to rise. That's because
Thank God.
I can always count on you, Miss Patsy. So that is the emotional investment. I'm going to pause here. Anybody got any questions on that before I continue? Because this is important for you guys to understand.
Can you still trust your charts and resistance lines?
Miss Patsy, you got any questions? I'm sorry, go ahead.
I was saying, can you trust the charts anymore now that they've removed the human traders?
Oh, it was always non-humans. Like the program that I wrote and the program that everybody else wrote that they write, they look at these levels right here. I mean, it's easy to figure out programmatically from a computer programming basis where this support and resistance line is. And here is the beautiful thing that I told you guys. If there's no guarantee that this level is going to hold, meaning there's no guarantee that we're going to stop going down there. If that does not go, guess where we're going?
Well, down, down, down.
This is the level that was there before.
Right.
So if this whatever this 500 or 600 point move does not hold, we're going down to the next one. And so you can start to see where the market wants to go up and down, and where the support levels are likely to right. So let's look at one other thing here. This is the Dow. Let's look at, this is the VIX. The VIX measures the fear in the market. The higher it is, the more fearful people are. And I'm going to take you back to, this is the level that we were at in October, November of 08. You guys remember this was the financial crisis. That's when everybody was going crazy, pretty much like they are now. And we got to this level of about 80. Guess where we're at now? We hit that level. And for those of you that are on the Facebook group, I posted the VIX is turning over. Is because this says that the fear has reached a climax. And that if you would notice that all of the news reports that used to be like so shocking, they're still causing the market to go down, but not as much. For example, we will probably be down the first couple of days of next week, but it's not like taking us down like 10% anymore. Again, if Trump would stay away from the microphone, we could go up, but that's not going to happen. So you can learn to watch. Let me show you on the daily chart here, and I'm getting away from what I wanted to show you guys. This is the daily chart. Carlton, and I think you and Tanika were in that VIX call, right? That you had that really big gain on?
I wasn't. She was.
Oh, okay. and you guys were staying in it, and we went sideways for 4 days. After you go up and then sideways, you're going down, right? So it's like, that's why I told you guys, please close that position, because it was obvious that the VIX, and we haven't even started talking about the indicators, but the VIX was going down. So let me back up to what I was saying. Again, first thing you do is to make sure that you go to cash on your retirement accounts. The next thing you do is you buy for the vault. And when I say buy for the vault, you want to buy stocks that are not going anywhere, i.e. they're not going out of business. You want to buy large US companies whose stock price has fallen down to those support levels that I just showed you, right? This is usually going to be stocks that are in the Dow. This is American Express, Boeing. Oh my God, Boeing. We're going to talk about Boeing. ExxonMobil. ExxonMobil, even with the price of gas and the oil going down like it is, ExxonMobil is not going out of business, y'all. They are not. Boeing, the United States government cannot afford to let Boeing go out of business. They employ too many people. They are the only major U.S. aircraft manufacturer. the government will start buying Boeing stock before they let Boeing go out of business. American Express is not going out of business. So let's take a look at some of those stocks again on those same charts we were just looking at. Start with one of my favorites, which is ExxonMobil. ExxonMobil is now, this is the price for Exxon. It was $80 just a few weeks and months ago, and now it's $30. That line goes back to, I think, 2006. It's been 14 years since ExxonMobil was that low. So let's think about this. You're buying for the vault, which means that you're never going to sell it. You want a really good price on it. If ExxonMobil goes down another $3, $4, $5, it's not going to affect you. But right now, you can buy ExxonMobil at $32.66 a share and give it to your grandkids when it's $85 a share in 3, 4, 5 years. Again, I'll take you back to when I think it was Chevron. Who was the company that was spewing all the gas and the oil in the ocean 5, 10 years ago? Anybody remember who that was? BP. If you look at BP stock, it got crushed like this when they were spilling all that oil. 2 years later, it was right back to the original price. This is, when I say overreaction, again, you got a oil war going on, you got coronavirus going on, but this is ExxonMobil, guys. It is not going out of business. So if you were to buy ExxonMobil Monday, Tuesday, Wednesday of next week, 3, 4, 5 years from now, you're really, you're going to be really, really happy with your purchase. The other one that I really want to show you guys, this is Boeing. Boeing was a $400 stock just a few months ago. It's now down below 100. That's a 75% drop in the value of the stock in basically, let's call it 2, 3 months. Again, the government cannot allow Boeing to go out of business. You want to talk about really good long-term buying opportunities for those that have some money outside of their 401k. These are some really good places to put some money. This is American Express. Remember those support and resistance lines? That's a line since 2016. Questions, comments? Mr. Connell Price, I want to hear from you. What are you thinking over there? And I'll give you a second to take your microphone off mute.
It's Connell. I'm thinking I need to get some Boeing.
I would agree with you.
I just told Kathy that.
You just told her she needs to get some Boeing stock?
No, it's about me, Steve. I'm talking about me.
Oh, I'm sorry. You need to get some Boeing stock. All right. You need to get Miss Kathy some Boeing stock too.
All right. Well, if I get it, she got it.
All right. Well, guys, this is generational type wealth. That is the opportunities that are being presented right now are the types that if you take advantage of them now, your children's children will be the beneficiaries of this. I mean, stocks do not go. I mean, these huge stocks do not go from $400 to $100 in a matter of weeks. It just does not happen. It just does not happen. So you've got to make a choice. And here's where everyone is that I've been speaking to. You cannot go with the crowd. The crowd right now is freaking out, and it is scared to death. Everybody is scared to death. And what you have to learn to do, and I say this all the time, when people are greedy, be fearful. When people are fearful, be greedy. It's been a very long time since we've seen this much fear in the market. Now is the time to be greedy and not fearful. You can be greedy, but be smart about it. You want to buy stocks that are way, way down like this, right? Don't just go out and just buy any old thing. Like, for example, Apple hasn't fallen very much. Okay, don't buy Apple. It's not down like everything else. You find these stocks that are just ridiculously thrown out. And for those of you that have taken the class before, this is the Bollinger Band, that little blue dot right there, that little blue line. Stocks cannot stay outside the Bollinger Band. They just cannot. So this thing has to rise just to get back inside the Bollinger Band.
Steve, I have a question.
Yes.
This is Artina.
Hello, Artina.
Hi. So how do you buy stock? Does it matter? Because I know there's Fidelity and Ameritrade, or should we just, is there a way to just buy stock without either of those types of companies?
There is, and I have a slide at the very end that will walk you through step by step on how to do that.
Okay, thank you.
All right, we'll get to that one. Thank you for the question. So this, again, is buying for the vault. And as much money as you can load up on one of these, I would suggest you do it. So this is what I think most of you are probably most interested in the speculation piece of this. So, okay, going to cash, that's pretty straightforward. You know, you just sell what you have. Buying for the vault, it's not really fun because you're not going to see the money yourself, and it's going to take a very long time to grow. That doesn't get most people excited. The speculating is high risk, high return, which is where most people have been asking me about. But I have to say that again, is high risk, high return. Right now, with the market being very volatile, you guys know I teach that you've got these three trading legs. You know, you got the vault, you got the trading, and you got the options. Right now, you should not be trading your middle trading leg, because trying to get 5%, the market is too volatile right now to trade stock. And really, on a monthly basis where you're trying to get in and stay in for 3, 4, 5 days or 2 or 3 weeks, it's just not, it's just too volatile. The risk reward is not there. For example, you're trying to make 3, 4, 5%, and stocks are moving 10, 12% a day. The risk reward, the risk that you're going to have a day that goes against you, is just too great. So right now, we're not trading the stock and trying to get, 3, 4, 5%. It's just too risky. But what you can do, again, separate piece of money, you can speculate. And I want to be clear when I say this, when I teach this, here are going to be your results. So you have to accept this. This money is either going to be a 100% loss or a 500 to 1,000% gain. It's either going to go away or it's going to go to the moon. So this is 500, 1,000, some money that, again, if it goes away and it goes to zero, you're not upset. You're not calling mad at me. Your light bill money is still getting paid, so on and so on and so on. So this is money that you can be happy if you lose all of it. Not happy, you won't be happy if you lose it, but you're going to be accepting if you lose all of it. But I'll show you a way that you should be able to get some ginormous gains over the next 6, 12 months. So here's what you're going to do. These are options. And again, not everyone is going to be comfortable trading these. If it doesn't apply to you, just don't listen to this. But you can buy long dated, 1 to 2 years, Carlton, you'll like this, out of the money call options on large US companies whose stock price has fallen to support. Does that make sense? It's the same thing. So let's think about this. Let's say that you think Boeing is going to go up back into the 400s, right? And you say, man, I think this thing, let's call it 300. You think Boeing is going back up to 300s. Guys, stocks don't go up as fast as they came down. So trying to buy, which I know some of you are doing, these little short dated options, it's not going to work. It's going to take this thing. It took, when was the last time Boeing was down this low? Last time Boeing was this low was 2016, right? So that was 4 years ago. let's say you think that it's going to come back up into this area in the next year or two or whatever. You buy 1 to 2 years out a call option on Boeing right now. Instead of paying $95 a share, I don't know what it'll be. I could look up the option price for you, but you buy a call that is way out. And again, this is either going to be 100% gain, 100% loss, or 500 to 1,000% gain. Probably nowhere in the middle. It's either going to work and this whole thing is going to turn around, or it's going to keep going. And if this thing, as far as this virus, it keeps lingering, the stock market is going to continue falling. That's just as blunt as I can be. We're not going to do a V-shape. It's hardly ever that you do a V-shaped recovery, meaning you go down and you come right back up. If you look at the charts, you can expect at least another, I'm just guesstimating because no one really knows, 2 to 3 weeks, kind of this sideways movement before we try to make any real sustained up movement. But if you buy something that is not going to expire for 2 years, you don't really care what the next week or two does. But Boeing outside the bottom Bollinger Band on the weekly chart being down $300, there's an opportunity to make some money there. I'll pause. Carlton, question.
That's a long time to hold my money, right?
That's why I said this is speculation. This is speculation.
Oh boy.
This is, if you had an extra $1,000, in a year or two that goes to $5,000. That you just gotta let it sit there. This is high risk, guys. It's high risk, and not everybody's gonna do this. You might be still back at, hey, I just want to make sure that I can secure my 401k. Just sell your stock. Okay, I want some long-term stuff for my kids. Okay, buy some stock. Okay, I want to be risky. I want to speculate. Okay, this is what you do. Questions, comments before I move on?
So how far out of the money are you talking?
2 to 3
Most people
strikes.
might not. 2 to 3 strikes.
Yep. Don't go 10 strikes out of the money. They're not going to work.
Wow.
Yep. You could do it on lower price stock. Look at United States Steel. United States Steel has been around since what, the 1900s? It's down to $5 a share right now. And the call options would cost you about the same amount as the stock right now.
Yeah. You think U.S. Steel would actually come back anytime soon? U.S. Steel has done me very poorly past year or two. At what point would you? I don't see the lines that show to get back into U.S. Steel yet. This
is U.S. Steel on a weekly chart, right? And it's hard. I scroll back. I can't see when the last time U.S. Steel, we came down, and I apologize for my lines. In 2009, we came down to, it's been a long time. I don't even see anything that's been down in the 5s. So you have to go way back. You trade U.S. Steel. This is just me, the Carlton. You can wait on the indicators to turn up on this guy. Right? Does that make sense?
Say that again.
You could wait on the indicators to turn up on U.S. Steel. Wait for the stock RSI to turn up.
Okay. Me personally, it burned me too much. You can look at this chart and see the RSI, how many times it turned up, and still, I don't know why. Come down like that. What about, oil, gas will not stay this low. ExxonMobil, is it a good one, you think?
Oh man, yes. This is oil. Oil went from, I was just at getting some gas. I paid $1.60 for my gas. That is crazy.
Yep.
That is That is not going to stay down there, guys. I mean, and so you say oil went from $60 to $20. That's a $40 drop in the price of oil. Oil is not going to stay this low. ExxonMobil benefits from the price of oil. So if you wanted to play the whole oil thing, play ExxonMobil, which is this right here. This is Exxon.
Whew.
That's a pretty chart right there,
Look
man.
at that, boy.
That is a pretty chart. It is sitting on $32 a share from $75, $80 a share.
Whew.
Buy the stock or buy 2 years out, 2022 call options.
Okay, so that's what you were saying. Do the call options with the oil and gas
That's it.
at this point. Okay.
Call options on the oil and gas stock. Can I look at Valero? Let's see what Valero. I haven't looked at that one. Let's see if it's doing anything. That's Valero. I'd have to scroll back and see when was the last. I mean, it's outside the bottom of Japan too. Valero is the country's largest refiner of oil. They take the oil and turn it into gasoline. So again, they went from 100. We were at 30. Good gracious. That thing lost 70% of its value. You're not entering on the weekly. You can enter on the daily, Miss Patsy. You can wait on the dailies to turn up. But again, if you're buying for long term, it really doesn't matter at this point. If you're looking to get a really precise entry, you could use, some of your indicators on the. I wouldn't be trading right now off the 233. I would not. I'd be trading off the daily. The market is too volatile right now. Questions, comments? Anybody got a question about a specific stock before I go into exactly how to get started with doing these for the folks that have not gotten started?
Okay, one question. Since you said we're hitting a resistance on the Dow, if it hits that support and the Dow starts to turn up, how long should you have your money out of the mutual funds before you get back in? What is going to tell us to get back in and not lose out on the rise back up?
So that's a great question. So that's a very personal question. The question is, if the market starts to rise, and when should long-term investors get back in? That's a risk tolerance play. For example, if you are a person that is very averse to risk, meaning you don't do the whole risk thing very well, you can leave your money in U.S. Treasuries until you see we go up 10, 15, 20%. You don't have to try to wait and try to time this thing. When that's going to probably happen is when all of this news kind of dies down. And who knows when that's going to be, who knows when this thing is going to get contained, da da da. So if you are a person that is very easily spooked by what they're saying on the news, leave your money sitting for the next 2, 3, 4 months in U.S. Treasuries, and you don't have to worry about it. If you are trying to be more precise and trying to actually, get in sooner rather than later, use your support and resistance. If we come down to this line and we start to rise and you get back in as far as your mutual funds or whatever, and then all of a sudden something comes out and we break that support line, you go back to Treasuries again. Now, you got to understand that not all of your 401k companies are going to allow you to move in and out of stocks that often, but it's the same thing. If you break this line, if the Dow breaks this line, we're going down to here. So we're going to go from 19,000 to basically 16,000 in the blink of an eye. Did that answer your question, Carlton? I'll assume yes.
Steve, this is Kawana from New York. I work in the school system, as you know, and we are now going headlong into Google products. And T-Mobile, as a matter of fact, is going to be giving all students nationally like 3 months free usage of internet service. The indicators are looking like we'll be out of school until September with all the fear that's going on. So would it be a good idea to look into purchasing Google stock at this point?
So this is Google stock that I have on the chart. I mean, I have up right now. Okay. So let's take that. I'm gonna show you how to answer that question. Let me remove this line right here. Absent of everything that you just said, because you have personal knowledge about Google products and things like that. So let's think about how, first of all, should you take that personal knowledge that you have about Google stock and apply it to a buying decision? People do that wrongly very often, because they'll take their situation and not realize what small percentage of Google's profits come from their personal situation. Google,
Okay, gotcha.
I mean, the New York City, whatever money they're going to make off of that and everything else is going to be a very small percentage of their profits. So you do not trade off of those type of, one-off type of incidents where, okay, we're going to be using Google products. So you don't go in and buy Google stock because your local school system just went to Google products, right?
Okay.
You can buy it by looking at this chart. That's a 200-day moving average. I won't go into that, but you can look and say, okay, where is Google likely to come to? And you can just look at where the emotion is. I can look at this chart and say, there's some emotion between that guy and somewhere in here. People that, somewhere in that area right there. You see that chart? You see that line I just drew?
Mm-hmm.
So that is where Google is likely to come down to, 995, not very much. So the question I always do is, if that fails, where is it coming to next? And then you just go and find that the last time that Google was, good gracious, last time was, somewhere down in here. So now you can say, if Google fails to hold this level, it's probably coming to here. So if you wanted to buy Google, what you should do is buy it as, once everything calms down, and if it goes down below this $1,000 price, sell it because it's coming down to $750. Go ahead and take your loss. If it breaks that 1,000 price right there, that support line, if it breaks through that, then sell it.
Okay.
Does that make sense?
Yes.
I got a question about Tesla. Sheba, unmute your mic for me. Ask a question about Tesla. What did she ask about Tesla? This is Tesla. You guys, okay, so I won't go into that. Tesla was easy to see this thing was coming down, and I got out because things didn't look like they were going to continue coming down. But right now, Tesla is not outside the band. Tesla is not one of those. I mean, here's Tesla's bottom Bollinger Band. How everything else was way outside the bottom band, Tesla has not done that. So Tesla right now is a crapshoot. If the market turns up, this thing is going to turn up. If the market continues coming down, then yeah, Tesla can break down through all of these support lines. I don't like this because it's too much. It's too iffy. It's not like, it doesn't look like that. That right there, that's Exxon. That is like, oh my God, I know what this is going to do. This is like, it can go up, it can go down. I'm not really sure. So I don't trade that. Sheba, I don't know if that answered your question or not.
Yeah.
But then someone asked about the benefits of buying the ETFs. There's not a huge benefit other than, clicking around here, other than, the ETFs are going to move with the market. What an ETF is, for those of you that don't know, is, they bundle up a bunch of companies, like the Qs are a bunch of tech companies, and they're all kind of moving together. I do not own any ETFs in my vault. They just it's just not. You're not going to get a very big bang, which is what you want over time, from buying a group of stocks like the Dow or the Russell. You want to be in, large companies that are paying dividends and the like. So I would not suggest that you buy any ETFs. There's a whole bunch of stuff going on politically behind ETFs right now that I won't get into, but I don't own any of those. David Churchill, you had a question. You had that question. I don't know if I answered it or not.
Yeah, you did. Thanks, Steve.
Okay. Duke Energy. So I don't trade Duke. Anybody know what Duke Energy symbol is? Robert Smith, what is Duke Energy symbol?
Not sure, but I know it's a good stock, or has been for my family.
All right, I think I just found it. Duke Energy is DUK. Let's look at it and see. Good Lord of mercy. So this is going from $100 to $68. It's had a 30-some-odd%. This makes no sense. This is Duke Energy, the people that are supplying power to your house. If anything, people are staying at home more now and having to pay more power bill. This is the opposite of what you would expect from an energy company. Their input, which is the fuel that it takes for them to make energy, has gone down, and the demand for their product has gone up, and yet their stock price is still down 30%. It's the opposite of anything that's logical. I mean, I would have expected Duke Energy to be going up, and instead, with everybody just kind of throwing everything away. Again, I don't trade this stock, but it's gone from basically $100 to $68. So what's that, a 30-some-odd% cut in their price? Again, I don't trade it, I don't watch it, but it's just kind of crazy. And my baby AAL, this is my baby. American Airlines. So what is the one group of stocks right now that is everybody is hating? It's airlines, and it's anything to do with like leisure kind of travel. So think about it. If everybody hates them, do you want to be selling them or buying them? Buying. American Airlines is not going out of business. And this thing has gone from $30 to $10. It's lost 60% of its value in 4 weeks. So the question you have to ask yourself is, in a year or 2 or 3, are people going to be on airplanes again?
Yes.
So do not sell if you own it, do not sell your American Airlines stock. Now is the time that the wealthy will load up the bus.
Buy more. Buy more
of American Airlines.
Mortgage stock. Your house and buy more. Mortgage your house. Buy more.
Don't mortgage your house. Don't listen to Miss Patsy, y'all. Don't listen to Miss Patsy. This is casinos and hotels. This is Wynn Resort.
Yep, I looked at that one. I call you on that one, Steve.
Yeah, I know you're always in this one, Sammy. This one has gone from $150 or so to $50. I mean, at one point it was down to $30. Come on now. Ooh. That makes, I mean, anybody with common sense would say people are going to gamble again. It might be next year, but to go from $150 a share to $30 a share in 4 weeks,
wow.
It's just, and you can see the support and resistance lines. It's right on that line now. And again, this thing has already risen from 35 to 50. So it's already made a 50% move off of its low. From where it was here, $36, it's already moved up 50%. So guys, this is what I'm saying. The news around coronavirus will continue to be extremely negative. if you are watching CNBC, Bloomberg, ABC, it does not matter. It is going to be negative. You have to learn to look through all of that and go, wait a minute, that don't make common sense. Do not get caught up with the emotion of, oh my God, oh my God, oh my God. That's when you lose money. If you get caught up with the crowd, you are guaranteed to lose money. You have to realize that the people that are on the talking heads that you're listening to get paid to have more people watch them. So they have no incentive to come out, which again, right now they wouldn't anyway, but they are going to keep talking about this for as long as they can. The market will turn up weeks before the news gets better. I'm telling you, the market will turn up and start rising, and they will still be talking about and scaring the bejesus out of people for weeks. So if you keep looking at them and not paying attention to what the market is doing, you're going to keep getting caught up with this emotion. And someone asked me, would I go more towards Delta? I don't follow what Buffett owns, 8-9% of the company. Because I can't get in at Buffett's prices. I'll look at Delta, which I don't know if I have or not. Good God Almighty. That's Delta too. That's gone from 60 to 20. Wow. I don't think it really matters at this point if you do Delta or American. Wow, that is some serious stuff there. Southwest, what's that? SWE, I think.
No, it's LUV.
LUV. All the airline stocks have just gotten. That one is not down as much, from 50 to 30. But again, it took a 50% haircut. So pick an airline. Delta, American. Pick Wynn Resorts. Pick an energy stock. I posted, just buy something. I mean, it's going to be good. This too shall pass. This too shall pass. And where are you going to be financially after all this passes? Do not wait until you get the all clear from the talking heads, because by the time they tell you that coronavirus is contained and there are no more people getting sick or no more people dying, the market will have risen 50% by then. So you can't wait until they tell you that everything is great. You got to be in before that happens. Any questions before I go to some very specific how-tos as far as getting started and what some next steps are? Someone works in healthcare. This too will pass, but have you heard it's going to get worse? Of course I've heard it's going to get worse. I believe it's going to get worse. The numbers will go up. I don't know if you guys are watching Italy today. And again, I don't want to get into the actual stuff around the virus, but I'm telling you that this thing will continue. The news will continue being very bad. And the way that you gauge this is, okay, I don't care what they're saying on the news, not to be insensitive, but what's the market doing? And again, I think we're going to come down another 600 points or so before we start to rise. And if it continues going down, you just wait until it starts to rise again. You sell your stuff, take a small loss, and don't panic. Questions? So there was a question earlier about exactly how to kind of get started. What are the next steps? What should I do from this point? I've never bought a stock. Here is where I would suggest you guys get started. Robinhood is a very user-friendly app. They've got a very good mobile site. They've got a very good app, and their site is very good. It's free. I would suggest you download that app tonight, link it to your bank account, and put in $100. Again, you're not putting in your mortgage money. If you've never traded a stock, just put in $100 or whatever you can afford. If you can't afford 100, put whatever you can afford in there. Or TD Ameritrade, because all of these charts and things that you've been seeing on the screen here, they are free if you have a TD Ameritrade account. And so you can create either. I think TD Ameritrade has waived their requirement that you actually have money in your account. You just need to create an account. I don't think you even have to put any money in it in order to get their software, which is called Thinkorswim, in order to start do this. Yes, Alex, I'll go back through the VIX in just a second. So you get started with Robinhood, TD Ameritrade account, and someone is confirming there is no money required for TD Ameritrade. And then you do your daily journals. You have to start getting familiar with, and again, you're watching the talking heads not to follow their advice, but you're watching their talking heads to start learning the lingo, start learning all of this stuff about what's going on. And again, if you're getting started now, it's going to scare the mess out of you the first couple of days that you watch this. You're going to want to go out and sell all your stock. Don't do that. Just watch Fast Money. Go to briefing.com. They got this thing called the Stock Market Update. They do a really good job of telling you why the market moved that day. And you're basically writing this stuff down in a journal again so that you can start learning how the market moves, when it moves, what makes it move, and so on. And then join the Facebook group, the Wall Street 101 group. And so those are the things that I would suggest you get started. So let me walk through. Alex had a question before I close this thing out. I forget who asked the question earlier about how to get started. Miss Artina, did I answer your question? As she starts scrambling to try to find her unmute button.
Oh, I'm sorry.
Did I answer your question?
Yes, you did. Thank you.
Okay, alrighty. So let me, Alex, I'll come back to you in just a second. This is the getting started. In addition to this, these are, I would suggest you guys that can take a screenshot of this or send me an email and I'll send you a screenshot. These are some really good websites to get started, some books I recommend, some apps that I recommend, as well as some podcasts and movies. So if you have the ability to take a screenshot, do so now, or email me and I'll send you this screenshot. And if you are not, like all these apps and things, like, you know, Thinkorswim especially, it can be pretty intimidating to learn and to get set up and so on and so on and so on. If that is something that, you know, you're not comfortable with, then we have, I call him student number one, Mr. Javante, is helping people. He charges a small fee, but he'll, you know, do an online session with you to get you started. He'll make sure that your, you know, all your apps are properly configured and so on and so on and so on. I know some of the folks have already been working with him and they've given him, you know, really good reviews. Again, just helping you get started. He is not going to be the person that tells you what to trade. You need to do that yourself. What he will be helping you to do is to get your tools and applications and everything set up so that you can learn how to do this, okay? And again, you can reach him at that email address and that phone number. Any other questions? So there was one question on the VIX. So again, the market is ruled solely by emotion. And VIX is the volatility index, and it basically is a measurement of fear in the market. It's called the put-call ratio. Shows you how many people are buying puts, meaning they're expecting the market to go down, versus how many people are buying calls because they expect the market to go up. So this is the weekly chart. We have this historic 4-week, just out of the blue right here, these 4 white candles right here. But look at what started happening, you know, the latter part of the week. This thing started to turn over, meaning that the fear was starting to come out of the market. Meaning people, again, not that the headlines, they're not getting any better. But here's what happens to people. If you tell them the same horrible thing over and over again, their effect, their emotional response is lessened each time you scare them. So the fact that, you know, California has got this stay at home, and I just saw in the news, New Jersey has implemented this stay at home, and that 2 or 3 weeks ago would have freaked everybody out. And now it's like, okay, it's bad, but we've heard it before. I mean, we've heard about people being asked not to go to work and to practice social distancing and all of that. So it's like, unless there's some really big shock that people didn't think of. I mean, we knew Italy was bad. We you know, so it's not, even though it was horrible news out of Italy and the number of deaths that they experienced in the last day or so. And again, not that the people on Wall Street are callous, but it's like, yeah, we knew about that. We knew that was going to happen. So that level of fear is starting to decrease as these stories become more familiar. And so what you're seeing now is the same stories are not causing as big of a market move. And you can see that very easily in the VIX. Now, Alex, I will tell you this, since you asked the question. If you go back and you research the VIX when the financial crisis hit, the VIX went up like this. The market didn't immediately respond, meaning the market didn't immediately go up as soon as the VIX started coming down. As soon as people started getting less fearful, the market kind of went sideways for a little while, and then it went up. So again, I would expect, again, we got a little bit more to the downside here. I wouldn't expect this market to just all of a sudden just rip and just we back at new highs very quickly. I would expect it to kind of go down, kind of go sideways, up a little bit, sideways, up a little bit, sideways, and then start to go up. So don't expect an immediate kind of return to the previous highs based on the VIX. Any other questions? This is a question and answer piece. This is me. You guys, most of you know how to get in touch with me. Robert, I'll send you the Facebook 101 stuff. I don't have any really big closing story or anything. It just, guys, you don't use quote unquote common sense, because common sense right now in the market will cause you to do what everybody else is doing. Use uncommon sense. Don't go selling all your stuff. Don't go freaking out and getting scared and this too shall pass. The market has probably got a little bit more downside. Protect what you have, i.e. go to cash if you're having problems sleeping at night and you don't want to lose anymore. I know a lot of you I've spoken to have lost 20 and 30%. Protect that. Buy some long-term stuff for your vault. Again, with that $100 that you have in Robinhood or TD Ameritrade, and then if you still got some extra money that you want to speculate, and again, try for either 100% loss or a 500% gain, then you can do some of the things we talked about as far as speculation. Can others whom have not taken your class get a focused trading account? Yes, I think so. Somebody go out and tell me. I'm pretty sure that I left open. You can request an account on focused trading right now. And that is, I'm pretty sure it's all open. Somebody, what's the advantages of a Fidelity account? There are no advantages or disadvantages. The all of the brokers right now, all of the online brokers are basically fighting. They have a war going on. You know, 10 years ago, they were all charging really ridiculous commissions, and they've all gradually come down. So Fidelity, TD Ameritrade, all those guys, Interactive Brokers, Robinhood kind of changed the game when they came out and said they were going to allow people to trade with zero commissions. And so now everyone has zero commissions. There is no advantage to your Fidelity account versus your TD Ameritrade account versus your whatever account. The user interfaces are, some of them are horrible. I was working with a friend who has a Fidelity account. It's you know, you just got to get used to it. Some of them are better than others. So So, and you just got to practice for those. Nia said, if you have a focus trading account and you have shamelessly not used it in a while, is it still available? I will not judge you. No, I will not judge you. It should be still available. I have not disabled any of those. You know, go out and try it, and you see my email address on the screen. If Valencia said yes. If you're having problems getting in and or creating an account on Focus, just send me an email and I'll see if I can get you logged back in. I will tell you that for those that have subscriptions now, I made the history research available to those that have subscriptions, so you no longer have to do all that history research. So check that out and give me feedback on that. I don't see if I see any other questions in the, I have a question from earlier. Is it smarter to buy more shares of a cheaper stock or less shares of a more expensive stock? There is no difference. Great question. It's not a question. The question is it better to buy more shares of a cheap stock like like American Airlines, or to buy fewer shares of a less expensive stock? If you think about it, it makes no difference, because what you're looking at is the percentage move of the stock. So you can buy, you know, $100,000 of American Airlines, right, and it's only $10. You could still buy the same $100,000 worth of Boeing. It's still going to cost you $100,000, and a 10% move, regardless of the price, the price of the stock, a 10% move is going to be a 10% move. So there's no benefit to buying that. The only benefit to buying a cheaper stock is if you don't have enough money, you know, to buy Boeing, which is $90. If you don't have $90, most people can come up with $10 to buy at least one share of American Airlines. That's the only benefit. It's still going to move, and your gains are going to be based on the percentage move of the stock, not the dollar move. Tech stocks like for the vault. Somebody's asking about the vault stocks or speculation. Vault stocks should be stocks that they're not going out of business. AWS is not a business. It's part of Amazon. Azure is part of Microsoft. Zoom Meeting, there's no way in the world you'd get me to buy Zoom Meeting. Zoom is a company that I'm not sure in 10, 20 years it's going to still be around. I'm pretty sure ExxonMobil and Microsoft is still going to be around. Who knows what's going to happen with Zoom Meeting? So you don't want to go buying those kind of stocks for your vault. And at this point, I would not speculate on something like Zoom, because I don't know if it's going to be around. I mean, think about it. It's an online conference call. I mean, how many of those are out there? And, you know, I don't know if it's going to be around or not. Maybe it will, maybe it won't. But you don't want to be buying stuff for your vault or even speculating on stuff that has a possibility of going away. And how do I feel about marijuana stocks? I don't trade them. Somebody else would have to speak to that. Guys, I trade, and I suggest you trade the big stuff. I mean, the Johnson & Johnson, the American Airlines. You start getting out into these marijuana stocks, and I know some people might trade them and they may do very well. I mean, it's like I don't go chasing like the latest fad. I mean, I didn't make any money on I was gonna say BitTorrent, BitCurrent. What is it? Not big. Bitcoin. I didn't make any money on Bitcoin. I didn't lose any money on Bitcoin. I didn't trade Bitcoin. I'm not making any money on the marijuana stocks. I'm not gonna lose any money on the marijuana stocks. You know, why go out and do all of that quote unquote high risk trading when I can trade American Airlines and ExxonMobil and the like? They're not going out of business. I don't know who's going to win in the marijuana stocks. You know, you guys may know more than I do. I don't know. It's just too much. They're high risk. How long are you going to have the subscription available? I want to get another subscription in the next month or so. they're available now. If you go on the website, go into your profile, get a subscription. This is on the Focus Trading website. I don't know. He's asking how long. I don't know until I decide to turn them off. So sorry, man. That's about as specific as I can get on how long I'm going to allow folks to subscribe to Focus. So, all right. Any other questions? I see a couple of you got your microphones unmuted. Any other questions before we hang up here, or any comments?
Real quick, Steve.
Mm-hmm.
Can you hear me?
I can.
How about the prison industry? Stock in the prison industry.
I don't know of any. I know of the what is it? Corrections Corp of America, CCA. But let's see. I don't know what their stock has done. Let's see what this is. This is Correction Corp of America. If you guys can see my screen, I'm not trading that. I mean, the thing ain't moving. Can you guys see my screen? It ain't going nowhere. They weren't affected by this whole coronavirus, which makes sense. So there's no reason for me to trade that.
Mm-hmm.
So I mean, it's not moving. You got to trade stuff that's moving up and down, and that stock is not moving. It moved from $12 to $12.82. I mean, I ain't got time for that. It's like, okay, time to go. You can go and find some stuff that is moving like this. That's going from $100 to $30, as opposed from $12 to $12.50.
Okay.
So, and you know, I'm not trading. I mean, you guys know what's in your mutual funds. You know, again, I don't buy in mutual funds, but if that's the only thing that you can invest in, you need to know what's in them, because you may go and find that you're in a mutual fund that has a bunch of tech stocks or a bunch of marijuana stocks. I don't know what's in a mutual fund. So if you want to know if your mutual fund is going up or down, you know, look to see what's in it. But you can also put your mutual fund in Thinkorswim, and you'll see the chart of it just like a regular stock. So mutual funds have symbols that start with a period. So it'd be dot whatever, and you would put that symbol in Thinkorswim, and it'll come up on the chart just like every other stock, and it'll tell you on support, on resistance, trading up, going down. You can trade it like everything else based on what your company, how often they allow you to trade your mutual fund. Most of them are only going to allow you to trade it, move it around maybe once a quarter. So you just got to know what your rules are. So, all righty, guys. I appreciate you. And if there's nothing else, I will be signing off.
Real good stuff, man. Appreciate it.
All right.
Thank you, Steve.
Thanks, guys. All right. Talk to you later.
Thank you, Steve.
All righty.
Okay, bye-bye.
Thank you.
Bye.